Hello, this is Jim Smith from GannAnalysis.net. Today we're looking at soybean futures, the November contract. We're using a scale of 10 points per month for the 1x1. That means where we fix from this high here, we anchor from this high, and we complete the square of 144 using a 10-point figure, 10 points per month for the 1x1. That means that this red line declines at a rate of 10 points per month, and where it gets down here at 343, it completes the square in price and time at this point here. And you might wonder, well, why 343? Well, you just take the high and minus 144 times 10, which is 1,440, and that would give you 343. So math is very simple. It's pretty straightforward. It all comes down to what scale you want to use. And for this, we're using 10 points per month. And you say, well, how did you know that? Well, the thing is, trial and error, you go through different markets and you see what works. And it turns out that 10 points per month works pretty well with soybeans. So you can see a quarter of the way through the square in time, and on this 1x2 line, the green line, in price, you found support. Now you get back above the 50% division at 1063. It looks like a promising rally, but it gives it up. Finds support on the 1x1, breaks it, goes down. You see how this point here, the 50% division. Now this is not a 50% retracement of swing. This is the square of 144. So it's just halfway through the square. So it's a different 50% mark than what you're used to. But nevertheless, it seems to be working because that gave you a high here. And when you broke the 1x1, boom, you were down like nobody's business. You just plunged into the 50% division on the square in time. That's pretty cool. And you did it 72 months down from high. So then you're chopping back and forth. You get above the 1x1, which is positive. You sell off. You find support roughly on that same 1x1. And when you break back out to the upside, hey, that starts a pretty big rally. And you accelerate when you take out the 50% division. That should not surprise you. Remember, for the most important division for Gann is the 50% division. So you rally back to the 3/4 division, or 1/4 down from high, and that was resistance as well as this 1x1. So you sell off, and when do you find support? In sync with the 3/4 division in time, and on the 1x2 line in price. So time and price, they work together. The geometry of time and price is what Gann is all about. That's what we're showing you here. You rally back, you get to the 1x1, that's resistance. You sell off, you try to hold the 1x2 line, you don't, you go down to this 1x2 line. Then you go back to the 1/4 division down from high in price. That's resistance. You can't get above it, oh, you go down. Now, taking out the 50% mark at 1063 was bearish. So, like the saying goes, don't try to catch a falling knife. When you see that a market is breaking below a 50% mark, hey, stand back, wait for it to show that it's bottomed. So we're cautiously optimistic only because we got the completion of the 144-month cycle in time. So from this high, September 2012, to this low, what we think will be a low in September 2024, is exactly 144 months, 12 years. Now, Gann said you can look for a bottom 1 month before the completion of an important monthly cycle. So in this case, 143 months down might be the low. So still, it doesn't mean you're going to go in and buy it. You're probably going to wait for a close above 1063. If it does that, you're off to the races. Now, I'm not here to tell you to buy or sell soybeans. This is strictly educational. I'm just showing you what Gann, the way Gann would see this market. This is how he saw it. And in his day, you didn't have computers. What you had was a transparency. Think of this as an overlay. He would overlay this onto the price, a transparency, and then he could follow exactly what was going on. So, as far as I'm concerned, it's great that we have computers because, this makes life a lot easier. So you can see all these turns, one high here, a low here, a low, a rally, a resistance, a high, resistance, a high, boom. You're just really knocking it out of the park. So the question is, Gann is subjective or objective? Well, that's kind of a stupid question because a lot of people don't understand music. And you say, well, how do you do music? It's not objective. Well, that's not the point. It's irrelevant. The point is you find the rhythm of the market the same way you do with music. If you're looking for rhythm, you're going to find something that works. If you're just looking at it with, left brain thinking, you're never going to get it. You have to use your right brain. You have to look for that rhythm of the markets. You have to understand that there comes a time when markets change trend. And for Gann, that would be a 144-month cycle. 144, 90, 45, 360, 180, all these numbers are important to Gann, and a bunch more. But the reality is, right now we're focused on 144 because that's what time of day it is. We're now in the month of September. If this market is going to rally, it has to do so or start doing so before the end of September. So, it sometimes happens that, maybe this thing craps out and it keeps going down and you can't always know when the bottom is going to be. But if you get back above 1063, you're probably starting. Let's say we're into October and we're up here somewhere and then we're starting to gain momentum on high volume. Well, that the 144-month cycle called a low. So it's not so much predicting the future. It's about knowing how to react, how to respond to the cycles as they appear. So if you look at this and you say, well, I'm not taking a trade. I just don't see the point. This thing has been dropping like a stone. It might go down here somewhere. That's possible. So, time and price. We look at time, we say, hey, the cycles are due. We think it might be a bottom in here sometime in the month of September, but we still have to wait for a close above 1063 in price to confirm what we see in time. Time is more important than price, but that doesn't mean we ignore price. Time and price together gives you a Gann trade. You can't do a Gann trade with just time. You can't just play with the cycles and expect things to work. And, if you're a chartist, a garden variety chartist, you never look at time anyway. You're just looking at price. So for you, Gann doesn't make any sense. But as far as I'm concerned, when I look at a chart, I see an X and a Y axis. I see both, an X axis telling you time. I see a Y axis showing you price. So if it's going up in price on the Y axis, that's good. But why would I ignore the X axis? Think about that for a minute. Traditional technical analysis is frickin' clueless. I mean, you can't do a good trade by ignoring time. You have to do time and price. And if they don't come together, then there's no trade. So the point is, let's suppose we're down here and we keep going down into October. Well, what does that mean? That means that the trade didn't happen. There's no point in getting excited. But if you see it get above 1063, hey, maybe there's something going on. Especially if it gets there in the next few weeks before the end of September, I would be very happy. 144-month cycle is a major Gann cycle. Now, we don't rely just on the monthly cycle. I'm just showing you the big picture. We have weekly, daily, we have all time frames. We even have quarterly. So we look at all the charts, we get an idea what's going to happen, And trust me, this is just one chart. I wouldn't base my analysis on one chart. If you become a client, you get 20 or 30 or 40 charts on each market. So you get a really comprehensive view of what's going on in that market. That's what we're aiming for. We're looking to give you complete information. This is not just throw something against the wall and see what sticks. This is like complete analysis based on Gann. We look at time, price, pattern, volume. We look at everything in order to get a trade. So that's the way it works. I hope this has been helpful. If you like this video, give it a thumbs up and follow us on social media. We're on Twitter, YouTube, Facebook, and LinkedIn, Instagram. We're trying to be everywhere. So I'm hoping you like what you see. Give us that thumbs up and follow us. And good luck in your trading.